Welcome to Alchemist Wealth Money Talks. And today we're talking beyond returns, value-driven investing with our friend, the illustrious Zach Conway. So we'll definitely allow Zach to share his story. But before we do that, Zach, how's the day going for you so far?
It's going great. I'm feeling amped up from our conversation here leading up to going live. So high energy. I'm excited to have the conversation with you guys.
Amazing. And so for those who don't know, I'm Andrew. My brother Fred and I, we run Alchemist Wealth, financial planning firm, investment management firm, and retirement planning as a specificity. And as we have been working with clients, we have been exploring and learning more and more about values-based investing, how to help individuals, families, and recently institutions. How do we help them invest their values? And so we met Zach, and we've been learning a lot, and really glad to have him here today. So I'll kick it over to Fred. Anything you want to say before we jump in?
No, just really excited to have this conversation. It is a piece that is valuable and important to a lot. Because you really want your money to do and work for things that are important to you. So excited to have this conversation. But yeah, Zach, go ahead, introduce yourself, and then feel free to talk about your journey, what led you to where you are, all those pieces. So
yeah, happy to. I appreciate it. I always kind of say I'm extremely lucky to have grown up in the industry. So I have a dad that's been doing financial planning since 1984, and so I got to experience him in the business from an early age, and take your kid to school days or take your kid to work days, at an early age, and understand what he did for a living and the value he provided to his clients.
Yeah.
And I didn't join the business right out of college. I did the corporate thing for a little while, and then ended up joining him about 10 years ago, or 10 or 11 years ago at this point. And what ultimately led to what I'm doing now and running this company called Seeds and working with awesome advisors like yourselves was in our own wealth management business, trying to figure out how to actually better engage investor clients and understand them and what was most important to them. And in particular, it was for selfish reasons. It was, how do we grow this business, and how do we actually attract and retain sort of the next gen and new demographics of investors beyond the existing clients? So as I, helped with that process, figuring out how to do that, how to go engage new investors, we took them through kind of our typical process at the time. And that process was, let me explain to you, client or prospective client, how we manage money. And it was sort of paradoxical or ironic, because everything else we do, even at that time as a business, was about putting them at the center. Not ourselves at the center, them at the center. So financial planning should be about what you tell me is important to you. But with investing, for us at the time, it was, let us tell you what's important to us and how we think about markets and why we're so smart and blah, 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 right? And what our credentials are. And so as we did that with NextGen, selfishly in trying to grow, those initial conversations, go figure, they're like, I could care less about how smart you think you are when it comes to managing money. You know nothing about me. Shouldn't it be just about what's important to me? And I've told this story before, but there was a very distinct moment. I actually a specific email that I got from a 35-year-old in response to that process we had taken that person through, that was basically like, that was horrible. All that matters to me is that you understand me. And in particular, in that example, it was about values. It was about, how are you putting a bunch of ETFs and mutual funds on a PDF and putting them in my face as saying, this is how we're going to, I'm going to manage your money, and not asking me how I feel about what my money's actually going to do in the world. I'm presuming that it's going to reach my long-term financial goals. That's part of why I'm going to hire you as an advisor. but you're really not going to ask me about what I think about where my money's going and what I'm empowering? How is that possible? How is that not a default setting of what you do as a fiduciary advisor? So I'm paraphrasing that email, but that's essentially what that person was telling us. And that was the like, holy, you know what moment in our business that then was like, wait a second, I think the whole industry might be broken on this point. How is this not a thing we're all doing? And so, you know, I'm filling in some gaps here, but jump to, we have to start a new company. We have to figure this out for ourselves, right? How can I go into that room next time and not put up slides and present why we're super smart, you know, asset managers that's maybe going to get them a better return? Not that that's unimportant, but returns are important. But how do I just ask better questions? How do I find out from that person in that initial meeting what they care about, what's important to them? And so that's what Seeds ultimately is trying to empower. We want to empower other advisors to sort of learn and do the same. What we were, you guys are ahead of the curve. You were already doing that in your own business, and so, you know, that's really kind of what led us to what we're doing now. So selfish about growth, but ultimately, growth requires a better experience and putting the person at the center of that experience. So that's what we're trying to do.
Right, finding a problem. Thank you to whoever that client is for having the guts, we could say, or courage to articulate exactly how disappointed they were. Most folks just, you know, head out. So I do want to ask, how do you, speaking of Seeds, how do you align investor goals with personal values?
Yeah, what we realized is like we need all the inputs. So even back to that meeting I'm describing, I need to know everything. At the end of the day, I need to reach goals and I need to convey how we're going to do that with a certain type of asset allocation and portfolio. And what we noticed in the marketplace at the time was this disconnection between you can do something to show an asset allocation and reach goals, or you could, in part of the portfolio, deliver sort of a sliver of values alignment. And it was like, why can't all of those things happen at the same time? Shouldn't they all be happening at the same time? And so what information do we need to gather from that person in that assessment experience to then present back the results and then dot connect very clearly to, here's how we're going to reach your goals with this overall asset allocation. And within every asset class, so to be specific, large cap stocks, mid cap stocks, small cap stocks, international non-US domiciled stocks, bonds, taxable bonds, tax-free bonds, even alternatives to some extent. If I'm delivering, let's say, a 60-40 portfolio, because that's the portfolio that I think is going to help you reach your long-term objectives that I also just heard you articulate to me, how should all of those little Lego blocks in that tower of Legos also be aligned with your values and all of, you know, all that list of securities all the way down the line? And so that was our challenge at the time. It was, I'm going to take you through like a values assessment over here, very qualitatively, like what do you thematically care about from a value standpoint? What do you care about? And then what are your goals? A totally separate process. What's this thing called your risk tolerance? I have to go do that in another system. Behavioral components, like how much do you actually care to be involved in the process? How much do you care about the details? Other aspects of like what's in your head as an investor. We were doing it qualitatively and like with 10 different systems, maybe exaggerating a little bit, but a bunch of different processes to get those inputs. So that was part of what led to Seeds. Like how could I just go through one assessment and capture everything and then show the client, hey, have your cake and eat it too. We can deliver on all of these things, bring the whole thing to life, make you feel heard and understood, and ultimately be, you know, aligned with your objectives as well.
And so a lot of criticism is some of the concerns that people may have. Specifically, the one that I think shows up quite frequent is, if I invest in my values, right, I won't earn as much as if I don't. Because ideally you would think, if I can invest in my values, like, why wouldn't I?
Why wouldn't I?
Yeah.
But like, what are some concerns, some other concerns that you may hear or see from clients when you're talking about investing based on values, and like how do you go about addressing them?
I'll start with, I think in general, first of all, advisors don't know, like this term ESG, advisors broadly don't know what that means. What does that mean versus impact investing versus values aligned investing versus your charitable giving? And then you layer in the political games we were talking earlier about. You can take a 3-letter acronym that's this like monolith term that means a bunch of different things and create and turn it into a political boogeyman. You can make it scary, right? It's this, the liberals are whatever. And so there's such a lack of understanding across the industry about what is, and because there's different versions even of how we think about applying ESG to an investment process. So the industry broadly doesn't understand what it is and what those different iterations mean. So how do you think the clients feel about it, right? Like we as the people who they're supposedly going to pay to shepherd them through these choices that they have as investors, a lot of advisors don't know. They're listening to the news about what it means, or they've read some article and they've made their decision. They did those research about whatever it is. There's such a lack of understanding. So I would say the first issue is that the client doesn't know what the choices are because the advisors don't know what the choices are, and they haven't presented choice. They've said, like my process before, here's the funds that I've picked to put into a model portfolio because we think they're great, or because a wholesaler came to our office sooner than the other ETF fund company. And this is what we put you in, whether you like it or not. It has nothing to do with you. It's just the product that we've put on the shelf and built our model portfolios around. So anyway, a long way of saying a lack of education in the industry, and therefore a lack of understanding of what the choices are. And so if you extend that through to the end client of what are the misconceptions that you're touching on that they already have, whether probably not because the advisor communicated them, but because they're seeing the same news articles and a friend at the cocktail party said this and some politician said this, whatever it is. And so not only do they not know maybe it's a choice, or they know there's some sort of choice, but there's some trade-off that feels scary, or, they're not going to be able to reach their objectives. At the end of the day, there's a path to not needing to invest in the things you are morally and ethically opposed to and still reach your long-term financial objectives. There's a whole school of thought, which I think is fair and research supports, not investing in companies that are failing from an environmental, social, and governance perspective is a fair investment thesis. What's going to happen to those companies that are breaking environmental laws? Do you think they're going to exist in perpetuity? You could disagree with what the EPA stands for from a political standpoint, but who cares, right? These are objective material risks, arguably. Now, let's say you don't believe that's true. And all you want to do at the end of the day is just avoid empowering gun manufacturers, private prison companies, fossil fuels companies, whatever, that you would never walk off the street and say, let me put my money behind these companies because I really believe in what they're doing and what they're doing to people and the planet. There's a path to, again, get the performance outcome. That performance isn't guaranteed, disclosure, but that can lead to the long-term outcomes that you're seeking. The last thing I'll say is trade-offs. When we at Seeds think about trade-offs, and maybe like getting to the heart of your question, again, if you don't believe in the thesis of you're mitigating risk by using an ESG filter in which companies to invest in, so take that out of the equation, then you can still own a broad index minus the companies that you wouldn't walk off the street and want to put your money behind, and optimize that, what you then are left over with, in a way that can track to some degree, some meaningful degree, that benchmark. So take the S&P 500. Fossil fuels are whatever it is, 3+% of the total weight of the S&P 500. So just to make it simple, if you said, I don't want to put my money behind Exxon and whatever for my reasons, well, you're not going to own roughly 3% of that index. There's going to be an inherent trade-off in what happens as a result. That doesn't mean positive or negative. by default. It could be either.
Tracking error either way.
It's tracking error either way. Now, again, there's a long-term investment thesis when it comes to ESG that says those companies that used to be a much larger percentage of the S&P 500, is that percentage going to start going back up? Is the digging dinosaur bones out of the earth to fuel our vehicles really the long-term investment play that we broadly think is going to play out? Or maybe not. But even again, if you don't believe what I just said, then it's a tracking error conversation. So you could win in a year, you could lose a little bit in a year relative to the benchmark, but it's up to the advisor to be having that dialogue with the client and saying, what's important to you? Do you want to match exactly what the S&P 500 does and own it all? Cool. Here's what that looks like. But again, it's incumbent on us to ask the question.
I love one thing that you said, which was, if you were to walk down the street, would I take my money and empower this company?
Yeah.
And there was a moment in my journey as an advisor where I realized that I was aggregating capital. Like, I came to this realization that I was going out to human beings and telling them and recognizing the portfolios that they would put money in, and realizing that I was aggregating capital towards certain companies, empowering them for the future. And I felt a responsibility in that to not empower companies that the client didn't want to empower. And so that really is what really brought me to talking about values-based investing and seed investing. I do want to ask a question about, because you mentioned ExxonMobil, and there was an article I shared earlier today around the state of Texas pulling $8.5 billion from BlackRock's ESG fund, or from BlackRock in general, over the ESG movement that BlackRock's CEO has been pretty adamant about. What are your thoughts on that move, and what are your thoughts on how ESG has become political, and is it really the space to be? Is it politics, and should it be politics?
Well, it is politics. I mean, again, it's this 3-letter acronym. Politicians are good with catchphrases and good with taking a label and changing what's actually within that label for their political benefit. And so both sides are as guilty of that as, it's the same. What I think is ironic, and again, like, agnostic of core political ideology, because at the end of the day, again, these are just political games. You can be sort of right-leaning from a core political ideology standpoint, left-leaning. At the end of the day, the game is, let me say it this way. BlackRock, we were talking about before we started.
Yeah.
So they're saying, BlackRock, you're out because you're an ESG thing, and you're promoting, this scary thing that wants to, woke capitalism, and we're going to quotas, and we're trying to shut down the fossil fuel industry, whatever. BlackRock is the second largest shareholder of Exxon, specifically. Vanguard's the first. We were just looking it up before we started.
Yeah.
And that's more or less true for all the other large traditional energy companies. It's either BlackRock or Vanguard, maybe State Street's in there, whatever. Top 3. So BlackRock's point is, we build products, investment products, to provide choice. So my counter to the right-leaning politician is, aren't you a free markets theorist? Like, isn't the whole idea that government out of the way, you as an investor should be able to choose? BlackRock provides choice. They have index funds that own all the companies that their ESG funds don't. And so they say to the market, do you want this flavor or this flavor? And we've built a financial instrument to provide that choice. That irony, though, unfortunately, is lost in translation. That's a headline. I haven't read the specific article you're referring to, but do you think underneath the headline anybody's reading or understanding that nuance? Of course not. Of course not. It's, we're kicking out the woke money managers, who are trying to derail our economy, blah, blah, blah. And what really bugs me is the irony. right? Because at the end of the day, like, we're all saying as fiduciaries, and Andrew, to your point about like that epiphany you had of like, we as advisors are just putting you in an outcome, whether you even know what you own or not.
Mm-hmm.
It's just, you're going into the portfolio because I picked the ETFs. That's wild as an industry, that's a thing that is just allowed. Like the SEC, the fiduciary standard, what's in the client's best interest. We have created such opaqueness as an industry that investors literally don't know that via BlackRock, full circle irony, and Vanguard, they are empowering these companies, whether they know it or care about it or not. And so, anyway, it should be about choice. We're the ones, now we have the epiphany in our own businesses, we should provide choice. That's BlackRock's point. And what those particular politicians should be on the exact same flipping page, but it's political. It's a game.
And do you think, because I was hearing you say they should be providing choice, and I couldn't agree more. And it sounds like they may be upset that people are choosing to invest in a way that doesn't empower fossil fuel industry, which is based a lot in the state of Texas. But also that they're entitled to their choice as well, if they'd like to, right? That the state can choose to invest in a company that has no options for ESG, that has no options for sustainable investing or non-fossil fuel investing. But it has been very interesting to see that their own state treasury says these moves specifically will hurt our constituents, our employees, and our companies by us taking this stance against our biggest investor.
My personal, so I'll go like because again, like I'm kind of in the middle, maybe reveal too much and get political here, but I have differing opinions across the political spectrum, right? I think there needs to be nuance, to just throw the headline out there.
Yeah.
The argument that fossil fuels companies shouldn't exist is absurd. How we operate as businesses, how my wife just drove somewhere in our gas guzzling SUV, like it exists, it will for some amount of time. That also doesn't mean it's going to last forever and that we shouldn't be migrating to better solutions. Of course we should. Anyone who says they disagree with that is lying, in my opinion. But at the end of the day, again, providing the choice to the end consumer or the end investor to say, here's what I want to do. I want to go drive my gas guzzling car, but do I really want to put my retirement savings in that company? And the other thing I always point out with politicians, we joked about this earlier, that long-term thesis, these politicians don't necessarily disagree with. And so in their personal portfolios, and you can look this up, like, Congress has to disclose, everybody has to disclose their personal investments. Do you think like Ron DeSantis has 50% of his portfolio in fossil fuels companies? Do you think he's like doubling, tripling down on the exposure relative to a broad index? Of course not.
Probably not.
Of course not. So again, it's like unfortunate irony. The nuance gets missed, which full circle is why I'm so passionate about it's on us as advisors, right? It's on us not to force anybody in some political direction, not to force, exactly what you should have in terms of your moral and ethical viewpoint, what you're going to own in your portfolio. It's about telling the customer as a fiduciary that they have choice. They get to decide what their money's doing, with the understanding that we need to reach your long-term objectives in the client's best interest, et cetera, et cetera, et cetera. There's different paths to get there, and you should know what you want to do and capture that.
You mentioned that it's our responsibility as advisors, thinking through not just, I guess we'll stay with advisors, but just the financial industry as a whole. Like, what role do you think we should play specifically in addressing some of these challenges? Sustainability, social impact, like the ESG part, impact investing. Like, what role should we play in that?
Being educators and being good listeners. And so when I say provide that choice, so equate it to like part of the fiduciary standard is we need to know people's quote unquote risk tolerance and these other financial inputs to then be able to substantiate why someone's going into a certain asset allocation for their objectives. To be specific, I'm saying understanding someone's moral and ethical viewpoint on exactly where those dollars and cents are going. At the end of the day, like we were talking about the opaqueness, we've almost made it like people have disconnected what investing literally is. Like it's gotten that disconnected of like, I see this labeled ETF and I kind of forget like what's happening. I know it's about growing money so that I can have a nice retirement, but people are so disconnected they forget that within that fund, there are companies. Those companies do things in the economy, and you become an indirect shareholder and empowerer of those companies. So beyond the fiduciary standard as it exists today and the inputs we need to gather, also capturing in initial conversations those inputs. How do you think about that? Do you even not know how to think about that? Let me educate you a little bit on what that means. Let's have a deeper discussion. Do you care? Right? Maybe you don't. Maybe you're not motivated by these things, and that's okay. Then I'll create the solution for that. But now that you know it's a thing, how do I connect, create the portfolio, implement it, reach your goals, and make sure you're not empowering what you don't want to empower? So that's, Fred, a long answer to your question, but I think the highlights are embedding this as a default part of your assessment, best interest analysis, and being an educator, learning it well enough that we can have conversations like this one and be the shepherd for the client to understand what those choices are. And if we do that at scale, by the way, Andrew, like your point on the Texas thing, it's not just a way to hopefully get more votes. It's, oh crap, what if the market does figure this out?
Mm-hmm.
What if people do realize that it's not just Vanguard and BlackRock index ETFs that they have to put their money in? That is scary if you're Exxon, right? Think about the math equation. Vanguard and BlackRock are the number 1 and 2 shareholders, owners of, just to pick on Exxon.
Yeah. And my 401k preset options for what I can invest in.
You don't even see it. You don't even see it.
When I start my target date fund holds all of them, right? And so I'm investing whether I want to or not. And I think that I don't have a choice. And so being encouraged to choose could be very costly for them. Yeah. I do have a question. You mentioned that clients don't understand the difference between some of the ESG pieces, and that definitely advisors don't have an understanding. It wasn't original, but on the spot, like, can you help us to understand the difference between some of the different categories, ESG investing or values-based investing or mission-related investing, and just kind of how to make sense of all that?
Yeah, it's arguably, there's a little bit of a sort of way to think about it as a spectrum, but just to focus on when we say ESG, and it goes back to your question about alignment of goals and values. At the end of the day, investing means you're putting money in traditional asset class investing. It means you're putting money into companies. There are no sinless companies. If they pass a certain ESG rigor, there's still a bunch of problems in there if anybody's looking at those companies through a moral, ethical lens. And so it's not impact investing in the sense of, I'm going to take $1 to put it behind a company because I want to empower that company for what it is specifically doing to improve outcomes, right? Maybe silly example, but like, here's a solar energy company. I want to put my money into that company because I want that company to succeed in doing what it does because it will have a quote unquote impact. And then there's all the way down to, community related impact investing. I want to, give loans in certain community. There's all sorts of variants of impact investing.
Yeah.
But that is distinctly different. And when we need to frame up for investors, like if you want to reach your long-term goals without too much volatility, let's say, there's a values trade-off, even if you're bringing your values into the equation, because those companies are companies. You may own Microsoft. Microsoft isn't building wind farms. They're building computers and doing AI stuff and whatever, but it's one of the biggest companies in the S&P 500. So that's part of the education process as well, right? A lot of times from Seed's perspective, as we help advisory firms kind of navigate this, and you have an investor who walks in the door and they're saying, I want purity, right? I want just what I believe in. Cool. Hear that, understand that. Yeah. Arguably, we should all want that. But if you pour all your money into small cap solar energy companies just to make it up, there's a trade-off there. You're taking on risk, and all of a sudden you deviate from what those long-term objectives might be. So helping people understand that you're not going to own what's egregious. You're not going to own what you don't want to own, truly. But companies are imperfect. So if you're going to build that portfolio through that ESG lens, you're still going to have impurity versus impact, direct, right in that company, because I want that company to continue what it's doing. So yeah, I think that's important.
I think one thing that you mentioned that I thought was pretty powerful was us having disconnected what investing is. Mm-hmm. I think by definition, we say to grow money. And so that is so interesting. But let's say that I am looking to grow my money and I don't know much about ESG, or maybe I know a little, given that advisors also don't know much about ESG and impact investing. But if I had strong values and I wanted to make sure my money got to what I did value, like what advice would you give to an investor?
It's really hard because I sometimes juxtapose, like, so you're the end investor, right? And you're having this thought of, shouldn't I be able to do both? And so shouldn't I go find somebody that can provide that solution? What's weird about that, back to the sort of paradox of it all, it's really embarrassing as an advisor when the end client comes to me and says, hey, you know, the tax laws have changed, right? Shouldn't we be doing like different tax planning now? Mm-hmm. That's a little embarrassing. So the fact that that's broadly the paradigm that we've created for ourselves as an industry is that the end consumer is being forced to educate themselves and then seek somebody who's providing the solution. So there are firms. So part of the answer is they can go find you guys. Like literally, who's out there as the monolith solutions waving the flag saying what we're talking about? Mm-hmm. But it's bizarre in that the end client has to do that. So on one hand, it's good for you guys right now because it's clearly a niche that's not being solved. But you push this out into the future, there shouldn't be values-based advisors and non-values-based advisors. Why should that divide exist if our role as the advisor is to just know what's motivating you in how you invest your capital as part of the fiduciary standard? And so Fred, yeah, the hard part is like, you got to go. I mean, literally, hopefully the clients are finding you guys, right? Watching this, finding your website and knowing that you are way ahead of the curve and solving it. Mm-hmm. But that's kind of the answer right now, is they know something's not quite right. They know there's what feels like should be choice. Mm-hmm. And so they have to go seek it and poke around and, again, hopefully literally find firms like you guys to solve the problem.
What would be what would be the best way? Let's say somebody doesn't have an advisor. Advisors have minimums. I guess we'll assume that's the case, right? What would you say to them? Like, I got 20,000 I want to invest. I don't want it going into whatever they don't want it going into, or I do want to make sure I invest here. Like, what is there a suggestion for them?
You know, it's tough. I think there are some sort of direct to consumer solutions out there. But what I found with that is ultimately, so it's really a business decision for us as advisors, right? Can we scalably onboard, like enough that we need to make to run our businesses? But sort of the standoff we're having, and why direct to consumer I think is imperfect, is because ultimately they need, and I think this is broadly why human advice will exist in perpetuity and the robo advisors aren't going to win and disintermediate us and put us all out of jobs, is because whether it's about values conversation, whether about it's the long-term goals, their relationships, trying to figure out what the heck to do and what money's all about for them and their families, what do they want and need? They need you guys on the other side of the Zoom screen having the human conversation about it and being an educator and talking through the nuance. You know, there's only so many PDF documents explaining the different choices and how to screen the portfolio and whatever that A, people are willing to do themselves, and B, really scratches the human itch of just explain it to me, just walk me through it, just help me understand, make me feel heard and understood. And so I do think it's an issue, right? Like there is a gap with, we as advisors need to make it work from a business standpoint. They need to see it, like it may not be solving the problem and trying to do it themselves today. And so I don't have a perfect answer to it, right? Other than, you know, maybe we all need more of a sort of pro bono angle to all of our advisory businesses to be helping investors like that.
Yeah. Well, if we're an advisor, right, there are some advisors who will stumble upon this conversation. How should they be thinking, and how do they get connected with you and Seeds, and what should they do to start their journey on being able to offer?
Yeah, I appreciate it. We are a young, growing company that really values this stuff. So we're thrilled that you all are users of the platform, but we want to exist for as long as possible where we can go deep and support advisors, really be hands-on. So not just deliver like, hey, here's this technology solution to help you guys in your business, but have discussions in the same way that we think about what we're talking about, where advisors need to be doing that with the end client using technology. We want to be supportive to advisors and have deeper dialogue and figure out how it fits in the business and help them grow and help them have better conversations. So a long way of saying we want to do that with some more firms. And so they should come check us out. It's seedsinvestor.com. I'm on LinkedIn. We've got a Twitter or X or whatever it's called now. You can follow us there. The only other thing I'll shout out, we're another teammate in Seeds, Kelsey McKenna, and I are now doing a podcast, which is pretty cool. So we talk a lot about these topics and how advisors can grow their businesses. It's called From the Ground Up. So you can find that and follow along. But yeah, we're here to have these conversations, help advisors go have those conversations with their end investor clients. So it's awesome. I love it. I'm clearly passionate about this stuff. And so, we're excited to keep working with advisors on that front.
Well, we've been working with Kelsey for the last, call it 6 months. So shout out to Kelsey, your coworker, podcast co-star. She's been great.
Yeah.
And so with that being said, we'll wrap. Zach, thank you so much for taking the time and really walking us through and thinking through value-driven investing and how to invest in a way that aligns with what you believe and where you want to show up in the world. And so if you have any questions, seek out Zach if you're an advisor, and if you're a client or a potential client looking to really align how you invest with the things that matter to you, seek us out and we can really walk down that path. So awesome. Awesome.
Thank
man.
you guys. This has been great. We appreciate it.
Good. Take care.